Well, hello again, everybody. This is John Norris of Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
Hey, John. How are you doing?
Sam, I'm doing okay. And part of the reason why I'm doing okay is because the more things change, the more they stay the same.
Yeah, you said it before we started recording, but you mentioned it kind of feeling like a Seinfeld episode.
It feels almost like a Seinfeld episode. And this version or podcast episode of Trading Perspectives might feel as though it's a little bit about nothing, because when I take a look at the headlines, it seems as though we've been talking about the same thing for quite some time. So how do we add value talking about DOGE? How do we add value talking about tariffs? How do we add value talking about anything? Because all of the ink that is out there, all of the ink that has been spilled since really the beginning of the year has been on a fistful of topics, and there's no difference here this week.
No, you throw in, you mentioned the big ones, but some Middle East tensions, well, that's not new.
How about that?
War in Ukraine.
What to say?
Since 2022.
How about that?
You know, tension with China and Taiwan, that's not new. I mean, and you know, we get these little iterations of change, or maybe some progress, or you know, maybe some backtracking, what have you, and you know, markets move up and then markets move down, and but at the end of the day, this isn't really anything new. I mean, there's not been any new information to really veer off and change your thoughts and outlooks on the markets, on the economy.
Not at least for the last week or two, without a doubt. So I'm going to do something a little bit different here, and Sam doesn't even know what this is yet. I'm going to ask him a very simple question. One question, 14 parts, right?
Yeah.
No, nothing like that.
I like it. Part A.
What has been thus far, here we are at the end of the first quarter of 2025, for all intents and purposes at the end of it, although a few days short of it. What has been, say, your biggest surprises thus far in the year?
I would probably, if we're talking about the markets,
we're talking about
anything, but
I'm talking about everything but your personal life.
I will say, I will say something about the markets, and I will say it's been the dominance of some of these international markets. I think that has been one of the bigger surprises to me.
Well, let me ask you this, and Europe has done particularly well.
Yes.
Asia, maybe not so much. I don't think Japan's done much of anything, at least when translated back into dollars it hadn't. And so let me ask you this. I mean, do you think people love Europe and they really think Europe is where the growth is, or do they just see a disconnect between valuations, and the last couple of years have been so dominant in the U.S. market, really the last 10, 15 years, that people just went to heck with it. I'm just going to pick some of this stuff up and hope for the best.
It's probably a little bit of all of it, but you know, you mentioned the divergence that's really been since 2008. I mean, there was some blips of convergence since then, but since we've recovered from 2008, it's largely been a U.S. market, and you know it as well as I do that people just see the S&P 500 and globally diversified portfolios and the divergence that those two have had for 10, 15 plus years. And so that has started to come back to it. And so, you know, the valuations has got to be a part of it, but part of it's too I will not say, and we've said for a while, that things are not necessarily great in a lot of these European countries, but things are pretty volatile, it feels like, right here and right now in the United States.
Well, I would say that I think, you know, and I've said this here, actually, very un-PC of me, that in the land of the blind, the one-eyed man is king, until he's wearing eye patches over both eyes. And maybe by some estimations, or some perceptions, the first quarter of this year, perhaps the U.S. has put an eye patch over both eyes and gone out of its way to alienate much of the rest of the world, including international investors. And it wouldn't take too much for international investors to just sit there and go, all right, instead of shipping my money over to the United States, I'm just going to keep it here for a little bit. And hope for the best. And I think that's probably as much of what's going on as anything else. It's just because we saw the Treasury international capital flows have slowed down, actually went negative, I think, in January.
Yeah.
And so that's a pretty good indication that investors aren't loving necessarily what they're seeing out of the United States. It could be Donald Trump. It could be Elon Musk. It could be just the outperformance our markets have had over the last couple of years. But if that money stays in Europe, almost by default, European markets are going to do better than they have.
Yeah, and some of these European markets that have done nothing are up 20+%.
Yeah, so yeah.
I mean, year to date.
Yes, I've seen them.
I mean, the German, the DAX, but what's...
and here we are in Germany. It's been in recession for the last 2 years. Its auto industry is on its back. MERS has he been sworn in yet?
No.
And so we they're not even allowing the party that got the second most votes in the general election to even participate in the government, and yet here they are up 17-18% thus far this year.
But part of it to me is I almost wonder I think Trump is partially the cause of it, but I think it's less so maybe just about, hey, volatility in the U.S., let's move back into European markets, but more the response that some of these European markets and governments have had. I mean, these stimulus packages that they're saying, oh, hey, now you're not going to financially support us, financially support NATO, I mean, backing out of all these treaties, what have you, and these trillions of dollars that they're now committing to spending has shaken the European markets. And so maybe that's the cause of it. I mean, we saw it with COVID, and we saw with the acts, the stimulus packages since then, the Inflation Reduction Act, ironically named. But we saw that here when you print a lot of money, or when you
just throw
money at stuff. It's pretty good for financial markets.
Yes.
And so we have not been able to get European countries to spend money for over a decade, really.
On defense.
Yeah. And so these
it's been a lot longer than a decade.
Yes. And so now you see what Trump has said, more so than actually done, but said and positioned themselves to do, has flipped the switch on some of these European countries. And so I think that's probably a big part of it as well. I mean, they're finally starting to talk about spending. And these packages, again, going back to Germany, are massive.
Yes.
Insanely big packages. I mean, their debt markets went wild off of this. The equity markets, clearly almost 20% this year, are going wild off of it.
And you know what? I think once all the euphorias are said and done with, I think markets will finally stabilize and come back down. I've read a fair number of articles about it, and while that's good news that maybe Europe is going to take on a little bit more responsibility for its own defense, I think they have been pulled into this practically kicking and screaming. And if all of a sudden they find out that the United States is going to go back to being Big Brother again, I think that they would happily have a return to that.
Yeah, and also the last part of it, we've talked about this a little bit before, but the European markets are largely just value markets.
Yes.
I mean,
it's old economy stuff.
It's old economy stuff. It's financials. I mean, you look at some of the indices in these countries, and none of the names were created in the last 50 years.
Yes.
I mean, these are truly old economy stuff, old businesses. And that's kind of done better than the growth side of things here in the U.S. So maybe that's just a part of it, this shift back to value broadly over growth names.
You've kind of mentioned something. This is going to be a complete aside. When I got into the industry back in the early 1990s, 91, 92 timeframe, some of the bigger names, and sort of like kind of the bellwether sort of names, and this might come as a shock to you, were General Electric, IBM, Big Blue, General Motors, and Ford. So you add up the market capitalization of all four of those companies, and it doesn't even come up to a third of what Apple's currently is. What do you think about that?
Been a hell of a run.
It's been a hell of a run. But the same sort of things happen sort of in Europe, only the fact that it doesn't have quite the same tech sector that we have. Mm-hmm. Those four names that I just mentioned, a GE, an IBM, a GM, a Ford, those are still the big names in a lot of these indices. I'm using them as straw men, of course. And so, but that's kind of what's going on. It's not necessarily stagnation, but it's not just sort of entrepreneurial sort of zeal and what have you. So that's kind of one of the biggest surprises to you is just how strong the international markets have been
some of these
primarily the European.
Second tier kind of European, and I'm sure they would hate to hear that term, but
they know it.
So that next level, that tranche down in European, not even talking about just Germany, France, and the UK, but Poland and some of these others.
What do you mean second tier?
I know. Yeah, I don't think they'd like that, but I'm not sure how many Polish listeners we have, so maybe that'll slide.
I have been sort of surprised by really in the markets. I've been surprised by just how well gold continues to do. I mean, if you take a look at gold, at the end of 2022, it was $1,850 or something along those lines, and now here we are today. I mean, $3,040? 3,050, something like that, and just a massive increase in the price of gold, and that has been a surprise that it just continues. It seems like every day there's a brand new all-time high. And it's got to be a function of a lot of things. I mean, central banks have been buying more, from what I understand. Russia's been buying more. China's been buying more. Get away from owning all these dollars, particularly the Chinese. But so when there's demand from the central bank level, then that's almost always going to filter back down into the retail level, because there's some backstop demand, and retail investors love it. And then you have almost a FOMO trade. Do you think there's a FOMO trade going on with gold?
Probably. Gold it has these...
It's a shiny hunk of metal.
Yeah, but it has these periods where it's in a lull and kind of does nothing, and then these periods of pretty significant outperformance against other asset classes. And, we talked about this a little, I think it was yesterday, with even how much gold is just being repatriated back to the United States. It's impacting...
It's screwing up the trade deficit.
It is vastly screwing it up. I mean, they had to come out and...
We're going to have a negative GDP for the first quarter because of gold.
It was a 2% difference plus, just when you net out the gold being repatriated back to the United States on an economy that's almost $30 trillion. I mean, to go from negative 2+% to probably
flattish, yeah,
off gold, moving back to the United States. I mean, there's been articles in the Journal and every other Financial Times, what have you, about gold that it's probably on your passenger plane and the cargo of your passenger plane coming back from Europe. Just how much and how difficult it has been to get all the gold that is shifting back to the United States. I don't fully understand why, but that I would be hard pressed to imagine that is not contributing to the overall price of gold.
Well,
and I get repatriating itself not going to move the price, but
I mean, to me, it's just it's not as surprising as much as it is kind of amazing to me. I mean, it really is. I mean, so you have all that repatriation of the shiny stuff from wherever it was. Central banks are demanding more of it, but then also let's face it, the world still seems kind of uncertain. And when things are uncertain, you kind of want something that has some permanence to it, and you don't get much more permanence than gold.
Yeah, and there's less of the issues associated with gold that there feels like and seems to be with real estate right now. I mean, real estate seems like, to me, where if I was really scared and wanted asset classes that are going to protect me, real estate's a part of that. But the real estate market here has all kinds of question marks.
It's a real question marks. All right, so we've hit on a couple of things that kind of surprise. I'm going to ask another one. This could be a little bit more. It seems like it might be a little bit more politically charged, and I don't mean for it to be. We can talk about religion after that if you want to. Just make sure we offend everyone. But what do you think about DOGE, and what do you think about whether or not it's a good thing, bad thing, or whether or not it's on long term a good thing? It just maybe short term it's just too much to swallow.
I think there's clearly inarguably waste in a lot of these areas, and this is something that shouldn't be a really pick the side of the aisle comment. I mean, no. Obama used to
that should be incontrovertible.
Well, and Obama pushed for that there was waste across our government spending when he was early in his office.
Early,
yeah, but so that part to me is not political. The reality of it, though, when you look at Treasury spending, it's not really slowing down. In fact, it kind of seems like it's speeding up still.
Yes.
Where's those? I mean, the cuts we're not getting these big axe swings and cuts out of it yet, and maybe there's more to come. But I started seeing some things about them coming through and slashing Adobe licenses, and my first thought with that is, yeah, if they're not being used, great. But is that going to get it done?
Are we going to balance the budget off of
Adobe and Microsoft Office? I'm just not sure that's
off of cutting USA Today subscriptions.
Yeah, and so I'm like, I get that is wasteful, and so to the people that love it, they're going to say, yeah, this is extremely wasteful, and I agree with a lot of it. But that's not fixing the issue. We're spending more and more and more, and that has not slowed down. And so to talk about balancing the budget, we're still not really moving in the right direction.
I'm going to tell you, we're not going to balance the budget. I don't care what Elon Musk has to say about it. And the thing is, I would give DOGE a little bit of a pass on the first 2 quarters out of any calendar year. I mean, it came in end of January. We're not going to find enough of that. I mean, the Treasury's already built in what it's going to spend the first half of the year. I think it's probably going to take the back half of the year, maybe even 2026, before you start to see any sort of needle moving with whatever there is to do in today. And so I've been kind of surprised, truthfully, maybe a little bit differently than you, just how easily DOGE has been able to come in and pull up some headline type numbers. I mean, it's but you're right, $1 billion here, $1 billion there. That's a ton of money to you and me and John Q. Public. But in terms of writing an annual deficit of 1.9 trillion, you got to come up with a lot
Plenty
of those.
of those.
Well, I've got to come up with. I mean, how many of those? I mean, quite a lot.
Yeah.
And so, I mean, you got to come up. And so it's going to take a lot more than what Musk has been able to come up with thus far. But, I don't know how deep they've dug, or if that's a correct verb and all that stuff. I don't know how far down they've gotten into the weeds on this.
Yeah, and there's been articles recently about Medicare and Medicaid and efficiencies that probably need to take place there. I mean, there's been talks of insurance reimbursements for double. I mean, you're being reimbursed twice for one procedure, one appointment, and so things like that. Yes, we have an aging population, and some of these things aren't really going to shrink, but we can at least get some efficiencies maybe out of those big areas. Same with the defense budget. I'm not saying we need to cut the true output of defense.
No.
I don't want that.
I actually want the Pentagon buying more 155 millimeter artillery shells.
100%.
I want them buying more offensive drones.
I want to build more ships.
Yeah, I want to do all that stuff.
So I'm trying to split the difference between what we're spending and the output. I mean, if we can create more efficiencies in the output, and the budget maybe shrinks a little bit for that, that's fine. But I don't want them to shrink the actual. So that's what I'm getting at, is create these efficiencies in Medicare, Medicaid. I mean, hopefully bring the interest rate, the interest expense.
Basically, what you're saying is, don't just start slashing expenses just to slash expenses. Let's make sure we're getting some bang for our buck in that regard.
Yeah.
And I would tell you that I think most people would completely agree with you on that. It's not just the sheer number as much as making sure that we're doing so that the Department of Government Efficiency is actually efficient in and of itself. What do you think about that?
That's a good place to start.
So I have been shocked, truthfully, about just how easy maybe some of these headlines have been for that.
I'll give you one more.
Okay.
And we talked about politics a little.
Yeah.
We can also veer into the border. I think that has been the rapid decrease in crossings at the border. I think has shocked a lot of people, because I wouldn't say there's been this vast change in policy necessarily. I mean, there's been changes, but it is not like we have brought in 1 million troops to the southern border to achieve this. I mean, these are levels that we haven't seen in decades.
Yes.
Over like a 2-month period. I mean, it's been unbelievable to see. I'd say that probably trumps my surprise at the international market. Yeah, sure.
But I'll tell you this, going back to DOGE for 1 second, just talking about government efficiency. What is going to be somewhat ironic about this, and maybe it's not ironic, and the misuse of that word is one of my pet peeves, but it might be, is the fact that by eliminating waste and becoming more efficient, in the short term, that will have a detrimental impact on economic activity.
Yeah. Ideally, it would be kind of like a J curve.
Yeah.
It contracts a little, and then you get benefit on long-term benefit on the back end.
Yeah, and so that's what ultimately the game is here. But there's absolutely no way, if Musk et al. And company can shave, let's say, $500 billion out of the annual deficit. Well, hell, I mean, let's just think of $1 trillion. That's great. That's beneficial. It helps out 10 years from now, meaning that we don't have to cut my Social Security check. That's that sort of type thing. However, you don't take $1 trillion out of government largesse and not have it have a negative impact somewhere, because that money's sloshing around, whether efficiently, inefficiently, whether or not it's fair or not.
Well, you can,
but someone's still spending that money.
That's what I've told people before is, if you are going in and you're like Office Space and you're going in and not working and getting a paycheck,
You still have
that's
a paycheck.
a waste of money.
That's a waste of money.
But you are then probably you have rent or a mortgage, and
You've
you
got
go out
rent,
to eat.
You're
And,
going to Buffalo Wild Wings. You're doing whatever it is.
yeah, that money is either getting spent or invested. I mean, it's getting put back into something. Even if you saved all of it, it's going into the banking system, which is then creating loans off of that.
Yes.
So a waste or not, when we put money back into the system, there's going to be something felt when you start to pull that back out.
And that's what I think maybe a lot of people don't fully comprehend, and when they're cheering DOGE on, or even when they're deriding DOGE, is just that there is definitely going to be that impact.
Yeah.
But the long-term benefits, I think, should outweigh the short-term negatives, without being cavalier about how painful the short-term negatives are going to be. So we have a lot of stuff that's going on right now. We've got a lot of things that we covered here today, but nothing terribly brand new, because it's the same old headlines. It seems like the news cycle is just second verse, same as the first. It's the same old thing. So I just wanted to get your thoughts on a couple of things, and I'm kind of surprised that the strength of the European markets was as high on your list as it was.
It's been quietly surprising, I would say.
Well, it's been very surprising just how strong it has been, because I don't think the fundamental story, but for the promise to spend more and more and more money on defense and other things, but for that, I don't think the story's changed terribly much.
Yeah.
I think the demographic headwinds and just a number of different things that have been holding Europe back, they're still entrenched, and we'll just have to see whether or not the Germans and the French make through on, particularly the Germans, whether or not they can follow through on all this deficit spending that Germans hate to do.
Remains to be seen.
All right. Guys, we always love to hear from you. Also, if you have any comments or questions, please, by all means, let us know. You can always drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you're interested in reading more, hearing more of what we got to say or how we think, you can always go to oakworth.com, OAKWORTH.com. Take a look underneath the Thought Leadership tab and find links to all kinds of exciting information, including links to previous Trading Perspectives podcast episodes, links to our newsletter/blog, Common Sense, available every Friday, links to our quarterly magazine and analysis, Macro and Market, as well as links to other pieces, particularly those by our advisory services group, head up by Mac Frazier, and those by our client advisors. Guys like Richard Littrell, and even Janet Ball has a couple out there.
I like it.
I like it too. All right, Sam, one last chance to say something about this strange topic, or lack thereof.
That's all I got.
That's all I've got today, too. Y'all take care.